All right, folks, we're now going to take a look at is the fraud risk. We're going to go through some of the concepts, the thought process that goes on to refresh your memory on how we handle these items. And we have a nice little memory tool that will hopefully help and tie in this little scenario we have. So let's take a look at it together. With respect to fraud, the auditor should perform the following procedures. And we say this opens the door to uncovering fraud. We should discuss the fraud risk with the engagement personnel, always required to have that pre-audit meeting. We should obtain information to identify specific fraud risks. We then should assess the fraud risk and develop appropriate responses. And then, of course, we should evaluate the evidence regarding the fraud. And as I mentioned, audit procedures help open the door to uncovering fraud. Let's take a look at the first one, the letter D. Discuss the fraud risk with engagement personnel. Auditors are required to have discussions of potential material misstatement that may result in fraud. Now, from the Becker CPA engagement team, fraud brainstorming meetings relating to the audit of Creative CPA. We have Donna Partner. I'm so glad that everyone was able to attend this required fraud meeting. I want to first start by emphasizing the importance of professional skepticism, which is having a questioning mind and critically analyzing evidence. We need to remember that fraud is possible in every client and that critical evaluation of evidence obtained is necessary. Now we're going to go on to the O, obtaining information to identify specific fraud risks. Auditors are required to inquire of entity personnel regarding their view of the fraud risk. Let's see the results of Nathan's inquiries in the excerpt from the fraud audit program. Now these are, and you'll notice, inquiries of management. Does management have knowledge of any fraud or suspected fraud? And the answer is no. Is management aware of allegations of fraud or suspected fraud affecting the entity, for example, received in communications from employees, former employees, analysts, regulators, short sellers, etc.? And they said no. Does management identify any fraud risk in the entity, including any specific fraud risk the entity has identified, or account balances or class transactions in which the risk of fraud may be likely to exist? And the management's response was no. Does management communicate to employees its view on business practices and ethical behavior? And the answer there was yes. Employees are required to sign a code of conduct annually. Does the entity have programs and controls established to mitigate specific fraud risks the entity has identified or that otherwise help prevent, deter, and detect fraud, and how management monitors those programs? And the answer is yes. And finally, has the entity entered into any significant, unusual transactions? And the answer there is no. We then had a conversation with those in charge of governance. So this is not management, this is governance. And we say, do those charged with governance have any knowledge of any fraud, suspected fraud affecting the entity? And they said no. Did those charged with governance identify any risks of fraud in the entity, including any specific fraud risk and entity has identified, or account balances and transactions for which risk of fraud may be likely to exist? And the governance board said no. The next one, do those charged with governance assume an active role of oversight in the entity's assessment of risk of fraud and the programs and controls the entity has established? And the answer there is yes. They meet with the internal auditors and management quarterly to discuss the assessment of fraud. And how does the entity enter into specific unusual transactions, or have they entered into unusual transactions? And the answer is no. Finally, we went on and asked about conditions or events that may increase the risk of irregularities. So in this case, has there been a high turnover? And in this case, if there was, that means you have one, issues, why are people leaving? And two, new people may not be as competent or experienced. But here the entity says no. They're very well experienced, very low turnover. Has there been a history of violations against the entity or its senior management alleging this item? And the answer is no. Are there any new accounting, statutory, or regulatory requirements that could impair? And the answer there, they said, was no. A new revenue standard was implemented in year 2, but the impact was fairly minor. The revenue standard did not and is not expected to impact the financial stability of the company or impair it or its profitability. But by the way, just having a brand new major standard will typically raise the risk standard by the auditor. And is the entity's organizational structure overtly complex? In other words, involves numerous or unusual legal entities, managerial lines of authority, or contractual arrangements without apparent business purpose? And they said no. They're a fairly simple organization. You'll notice that based on this, we have assessed a low standard for fraud. Because the fraud risk is assessed low, less risk, less work. Nathan probably will not engage in additional supervision beyond the normal, and Nathan will still incorporate a level of unpredictability in his sampling. This is important in an audit to help uncover fraud, if any. The next item we're moving on and we're still looking at is the letter R. Remember, this is the risk assessment and developing appropriate responses. There is a presumption in every audit of two risks: improper revenue recognition and management override. Still in the R, accounts identified as potential fraud risks should have the nature, extent, and timing, there's your net, altered accordingly. For example, even though the new revenue standard was considered not to impair the financial stability, it is still important to obtain more persuasive evidence to determine whether the standard has been properly implemented and that internal controls surrounding it have been implemented. Implementation of the new standard may provide an opportunity. Remember, opportunity is one of the three elements for a perfect environment for fraud: pressure, opportunity, rationalization to commit or conceal fraudulent activities. Still in the R, Nathan performed the required analytical procedures on revenue during the planning to help identify the improper revenue recognition. And by the way, we performed those procedures way back in Audit 2 in Module 7. Finally, still in the R, Nathan will review accounting estimates for bias. Nathan will examine journal entries and other adjustments to the financials. Nathan will request that the client provide data for all the journal entries throughout the year. And Nathan will scan through the journal entries to look for non-standard items. Some examples would be debits to fixed assets, liabilities, or inventory and credit sales. So if the debit was not to cash, we may be interested, why was the debit to fixed assets and the credit to sales? Why was it to a liability or inventory and credit to sales? Normally, it should either be a debit to cash or a debit to accounts receivable. We're looking for charges to retained earnings. We're looking for non-cash accounts receivable credits near the end of the year that are reversed at the beginning of the next year. Sounds like somebody was hiding a fraudulent transaction. Or entities made late in the night, on holidays, or weekends. And finally, we have the E of DOOR. And this is evaluate the evidence. Nathan and his team should be alert for fraud throughout the entire engagement. Analytical procedures will be performed at the end of the audit, and Nathan should be alert for any new indications of fraud risk that were not previously identified. These new fraud risks should be discussed with the entire engagement team, and this may result in the need to perform some additional procedures now that the new risk has been brought to light. Well, ladies and gentlemen, that takes care of an illustration of how this is done. You're now ready to try an exercise.